Okay, have you ever stopped and wondered what invisible force stops a massive company from just falling apart? It's not magic, it's a system. And today we're going to pull back the curtain on the essential framework that keeps businesses honest, efficient, and, secure. Let's dive right in.
First things first, let's imagine a world without this system. Picture a busy store, but with no rules, no oversight, no process at all. It is a recipe for absolute chaos.
And let's make this really simple. A company might handle thousands, maybe even millions of dollars a day. So what actually stops an employee from, say, pocketing a little bit of cash from the register and just hoping no one notices? Well, this is one of the most common problems you'll see. At the end of a long day, the cash in the drawer doesn't match the sales report. So where did it go? Was it just a simple mistake, or was it something a little more deliberate? You see, without a system in place, it's almost impossible to figure it out.
And it's not just about cash. What if the inventory records say you have 100 laptops, but you look on the shelf and there are only 90? Or a sales report is just flat out wrong? This kind of mess makes it impossible to run a business effectively. You're basically flying blind. So how do you fight all this chaos? Well, you don't just make up rules as you go along. No, you use a proven blueprint, a really structured plan designed to protect the business from the inside out. And that blueprint is called internal control. Now, I know that definition sounds super corporate and a bit dry, but here's what it actually means. It's just the set of rules and procedures that help a company run smoothly, report its finances honestly, and, of course, follow the law. Think of it as the company's immune system. And the gold standard for building this immune system is something called the Coso framework. It stands for the Committee of Sponsoring Organizations, but you don't need to remember that. Just think of it as the ultimate recipe book for creating a strong and reliable internal control structure. I mean, pretty much every major company in the world uses this.
So these 5 components, they all work together, kind of like building a fortress. First up, you have the control environment. That's your foundation, right? The ethical culture of the whole place. Then risk assessment is like your watchtower, always scanning for potential threats. The control activities, those are your actual defenses, the walls and the gates, and we'll talk more about those. Information and communication, well, those are the messengers, making sure everyone has the right info. And finally, monitoring. That's the general, constantly inspecting the defenses to make sure they're holding up. All right, let's zoom in on those walls. The specific, tangible actions a company takes to stop problems before they even happen. These are called control activities. And really, they're the heart of the system's defenses. These are the main types of defenses we're talking about. We've got separating key jobs, making sure transactions get the proper sign-off, keeping a solid paper trail, physically locking things up, and, of course, having someone else double-check the work. Each one is a totally different layer of protection. Now let's zero in on what is arguably the most important one: segregation of duties. The entire goal here, as this quote says, is to make it pretty much impossible for one single person to both commit fraud and cover their tracks. So here's the critical point. You absolutely have to separate these 3 key functions. The person who approves a payment should not be the same person who has physical custody of the checkbook, and neither of them should be the person who then records that payment in the accounting books. And this, right here, illustrates the difference perfectly. On the left, one person has all the keys to the kingdom. They could write a check to themselves, take the cash, and then just delete the record. It's easy. But on the right, that's impossible. To commit fraud in that system, at least 3 people would have to get together and conspire. It's just so much harder. Another wall in our fortress is good paperwork. I mean, why are pre-numbered invoices so important? It's simple. It means you can't just lose invoice number 102. If it's missing, that immediately raises a red flag. It creates a trail that's super easy to follow and really hard to fake. And sometimes the best defense is the most obvious one. We're talking about locks on doors, safes for cash, password protection for important files, security cameras. These simple physical barriers are incredibly effective at safeguarding a company's most valuable assets. But here's the thing. All these walls and gates and locks are totally useless if the people inside don't care about defending the fortress. And that brings us to the very foundation of the entire system, the control environment. It really is all about the people and the culture. You see, you can have the best rules in the world, but if management doesn't actually believe in them, they're worthless. A strong control environment, it always starts at the top with a leadership team that genuinely values integrity, hires competent people, and sets a clear ethical tone for the entire organization.
But let's be real for a second. Even the most impressive fortress has vulnerabilities. No system designed by humans can ever be completely perfect. It's just not possible.
And this is a really key concept. Every single internal control system has what are called inherent limitations. These are basically built-in weaknesses that you can try to minimize, for sure, but you can never, ever completely eliminate them.
So what are these weaknesses? Well, most of them come down to people. A tired employee makes a mistake. Two people decide to work together to cheat the system. And maybe most dangerously of all, a powerful manager just decides the rules don't apply to them. Collusion is a direct attack on that segregation of duties principle. Remember how we said it's hard for one person to commit fraud? Well, if the person approving the payments and the person recording them team up, they can bypass that control completely. But the single biggest threat, by far, is management override. This is when a senior executive uses their power to force someone working for them to break the rules. It completely undermines the entire system because the very people who are supposed to enforce the controls are the ones breaking them.
So after all that, why should we care about this invisible architecture? Well, because a company with strong internal controls is simply more stable, more reliable, and more trustworthy. For investors, that means their money is safer. For employees, it means a fairer workplace. And for us, as customers, it means a business you can actually count on.
But ultimately, you can design the most brilliant fortress in the world with all these layers of defense. But it all comes back to the people inside it. Which leaves us with one final and pretty crucial question. If controls are there to check the employees and management is there to check the controls, who ultimately is checking the checkers?